Thanks, Craig. Okay, great. Thanks very much, everybody. I'd like to call this committee to order, Administration Finance Committee. Are there any declarations of pecuniary interest on the Municipal Act? Seeing none. Delegations, we have none, but we do have a presentation. Consent agenda, there is one item under the consent agenda, and I'd like Mr. Dyer just to say a couple words about that.
Yes, thank you so much, Mr. Chair. So just a quick overview. It's an information report for the most part. There is a minor amendment to the capital program that we're requesting, but I thought I'd just give a little bit of context to the overall projection. You may recall when we did our initial periodic financial report. This was based on April 30th results. We were projecting a shortfall, a budget shortfall on the property tax side, mainly due to what we understood at the time to be the significant provincial funding cuts, which were retroactive to the start of this year. Of course, a lot has changed since that time, and many announcements that had been made with respect to funding have now been reversed, for lack of a better term. We provided an interim report over the course of summer, based on results to the end of June. At that time, we were projecting what we called kind of a close to break-even position. And now, with more announcements and reversals having been made, we're in a situation where, through the report today, based on results to the end of August, we're actually projecting a fairly modest surplus on the tax side. So a lot has changed since we originally reported to committee back in June. It's gradually become more positive. A couple of areas that are continuing to present challenges for. So one is on the wastewater revenue side. You'll recall that we've had some shortfalls on the wastewater revenue side for a number of years. That appears to be the case again this year. We can manage it within the overall rate stabilization reserve, and we'll be looking to make some further adjustments to wastewater flows as we head into the 2020 budget. On the tax side, I would say non-property tax revenues, for the most part, relatively on target, a little bit short on the sale of recyclables from that revenue, a little bit positive in other areas, including GRT fare revenue. On the expenditure side, I think the most significant challenge budget-wise right now is with respect to the funding of development charge exemptions, which we're projecting to be significantly over budget in 2019, but manageable within the overall budget as a result of surpluses in other areas. And in that regard, we are working on a staff report to come forward to committee, I believe, at the next cycle with respect to a longer-term funding strategy for a variety of development charge exemptions.
Okay, thank you, Mr. Dyer. Are we expecting any more funding announcements from the province? Oh, the look he gave me. Don't push your luck, Strickland. All right, Chair Redmond.
Thank you, Chair Strickland. At the risk of sort of dampening down this good news, I'd just like to point out that I wouldn't call them reversals, Mr. Dyer. I would call them postponements. And I think there's some inherent fundamental restructuring that's happening and a new way of doing business. And I think we can't lose sight of the pressures that that's going to bring on this budget 2020 and going forward.
All right, good point, Madam Chair. Okay, there's a recommendation there as part of the consent agenda. Could I have a motion to accept? Councillor Fox and Councillor Armstrong, all those in favor? That's carried. Thank you very much. Consolidated investment policy, and Kathy Deschamps is going to introduce our guest speaker.
Thanks. Yes, what you have before you today is an information report regarding the region's current investment policies and potential investment options that we might want to consider. As you know, the Municipal Act sets out which types of investments municipalities may hold, and they're restricted by types of investments and credit quality. The region's policy is more restrictive than that available under the Municipal Act. One investment is a not-for-profit organization that helps municipalities manage their investments. They have a professional fund manager, and they're going to be making a presentation for you today to tell you about some of those options that we may want to consider. So I will introduce first Eleanor Schneider. She's a program manager at One Funds. Also speaking today will be Keith Taylor. He's the investment manager at One. And Colin McDonald from Municipal Finance Officers Association is also joining us today. Eleanor?
Okay, welcome.
Thank you, Chair, and thank you to the committee for having us today. I will walk you through a brief overview of One Investment, who we are, as Kathy mentioned, and Keith will walk you through the investment portion and speak to you about opportunities that exist within our portfolios. Who is One Investment? We are a nonprofit organization. We were established in 1993 by Local Authority Services, so LAS, which is the business arm of AMO, and the Municipal Finance Officers Association. We offer legally compliant investment opportunities to the municipalities across Ontario, ensuring compliance with the Municipal Act. We have oversight that are provided by municipalities as well as an investment advisory committee. I'll show you our governance structure in a minute. This has been in long existence, the peer advisory. We think that's key in terms of understanding what the municipal sector is looking for and needs regarding municipal investments. Our investment advisory committee is comprised of investment experts. They have been with us since 2016. And they provide us with a wealth of information and opportunity for us to expand our offerings as required to meet, what the needs are of the municipalities. Currently, we have 165 municipalities invested with us with a broad range of investments. Just to give you a little walkthrough here in terms of our legal list governance structure, and how the information flows. But as you can see on the right-hand side, our committees provide that information and advise One Investment in terms of needs. And One Investment really acts as an agent in between the municipalities and our portfolio managers. So municipalities actually appoint One Investment, and you're responsible for your investments in terms of according to your investment policy. But One Investment does the rest in terms of the back office operations, making sure portfolio managers manage those funds to comply with the Municipal Act. Who invests with One? Just to give you a brief overview in terms of municipalities and the size of municipalities. Probably we have over 50%, so 63%, this was as of Q2, of municipalities with populations less than 25,000 invest with One Investment. And investments by portfolio, as you can see, our high interest savings account, it has a very high or a very attractive interest rate. And we have a lot of municipalities that are investing with us currently, very full liquid investments, so you can remove your money at any time. Again, it's just a bank account, but we have the portfolios available as well. Our equity portfolio seems to be growing as municipalities become more understanding in terms of the return opportunities available to them for long-term investments. With that, I will pass it over to, actually, One's business philosophy, just again to recap, full compliance with all legislation. We are really committed as two organizations, entrenched in the municipal sector to ensure compliance and provide the easiest turnkey services to municipalities. So both of our organizations understand municipal finance and the municipal sector, and we are here to educate and provide as much information and make things as simple as possible. So with that, I will turn it over to Keith, and he'll walk you through our portfolio offerings with the legal list.
Okay, thank you very much, Eleanor. Just before we hear from Keith, and nice to see you again, by the way. Keith, we had a good chat at FCM. Mr. Dyer would just like to say a couple words introducing Keith.
Yes, thank you, Mr. Chair. So just a little bit of context for councillors as you listen to Mr. Taylor's presentation. Trying to give some context to the problem that we're trying to solve, or the issue that we're trying to deal with here, and it's twofold. And so one is we have a significant amount of capital investment to make over the next 10 years. a sizable portion relating to the renewal of existing assets, and another sizable portion relating to infrastructure that needs to be put in place in order to serve growth as the community grows. So a lot of infrastructure needs. We have, as you know, a relatively small reserve and reserve fund balance and portfolio. So part of what we're trying to do is look for opportunities to grow our reserves to provide a source of funding for some of this investment that we need to make over, I guess, over the long term, certainly over the next 10 years. We are in I would say, a protracted, extremely low interest rate environment, which you'll see positively when you have your special council meeting shortly to approve debenture bylaws for the issue that we just did, but which presents a significant challenge for us on the investment return side. And then the other piece is that we, the region, has issued a fair bit of what we refer to as sinking fund debt over the years for a variety of projects. And this is where we make a contribution into a sinking fund each year. That sinking fund has to achieve a certain rate of return so that after 20 or 30 years we have the dollar amount we need to pay off that maturity. Again, this low interest rate environment is making it extremely challenging for us to meet the minimum requirements in order to have that amount of funding available. And so we have been talking about and thinking about different opportunities that are out there to find additional yield on our investments and managing the risk that goes along with that additional yield. So I just ask you to keep that in mind as Mr. Taylor speaks. Our intent subsequently is to come back with a follow-up report with recommendations for changes to the region's consolidated investment policy. So this is kind of the lead-in to that conversation. Thank you.
Okay, the floor is yours. Thank you.
Thank you very much. Thank you for having us here today. I'm an investment manager. My whole job is to help municipalities better manage their finances or their investments specifically. And One Investment has products that are designed to be basically give all the options available to build a diversified portfolio. In terms of what we see on our side, in terms of what your community has invested, I'm glad to see that you have a large chunk of money invested in our HISA product, High Interest Savings Plan. That is basically a bank account, and we're offering interest rates of approximately 2.4%, which is respectable in this environment, but it is like a bank account. There's no, it's a very low-risk product. But for municipalities or investors that have longer term financing needs, unfortunately, products like this are not sufficient on their own. We encourage yourselves and others to at least consider having some allocation into other investments that have the potential for growth. The HISA, again, it's a stable return. It's very predictable. But for longer term financing needs, if you can increase the returns that you receive on the monies you have in the bank or invested in products like this, if you can increase the return, that means you don't have to go back to the taxpayer to fund the projects down the line. So we were asked to come here today to talk about two of those products that are basically complementary and would serve that need, that they're longer-term investment vehicles that are pooled portfolios that municipalities do use to build a diversified portfolio. And they say there's no such thing as a free lunch. I disagree about that. In finance, generally speaking, if you're talking about individual investment opportunities, you can't get more return without taking a little bit of risk. And with equities, there's a considerably more risk, but you get paid to be there. There's more volatility in terms of returns, but because the equities grow over time, the overall improvement in returns for the portfolio is self-explanatory. The same thing we have a product called the Universe Corporate Bond Portfolio, which, the suite of products that we have actually opens up an opportunity set that is not available to the municipalities under the Municipal Act. There are certain things that we can do in our portfolios you just can't do on your own. The universal corporate bond gives exposure, for example, to corporate credit. That is, instead of buying, provincial or sovereign bonds that give low yields, there's a pickup in return because there's a little bit of credit risk. And yeah, the conversation is, should you consider adding some of the universal corporate bond portfolio, which should help augment returns over the long term, or equity, which does the same thing. In front of you, this just gives you a sense of the returns. I'm not going to go through this whole thing. I'm trying to make this a little bit quick. But if you just take a look at the returns at the lower portion of this table for the Canadian equity portfolio, last year was probably a really nasty year for equities. There was a negative return. This is one of the things that comes with equities. But you take a look at some of the other years, and you can see the potential for growth. In 2017, there was a return in the portfolio of about 10%. We also, just cherry picking here, in 2016, it was about 14%, 2014, 19%. This is completely unlike the high interest savings plan that I pointed out earlier, which currently is 2.4%. So if you have longer term financing needs that you're looking at, that you want investments to match, equities come into the play. There will be years where you will regret it. The market does go down, but over the long haul, you should be paid to be there. Putting it in a slightly different context, in this chart, we lined up all the returns going back to 1980, lining them up, ranking them. So if you pick the years with the best returns, this is like 1 year returns. You can see that there were years where you had some pretty nasty down sweeps in the equity market. On single year basis, there are years where there's been spectacular returns. But if you invest for more than 1 year, and that's sort of moving off to the right in the diagram, the longer period you have that you are invested, even starting from the worst or from the extreme position, the longer you are invested, the more, the fewer unexpected results get averaged out. And the rule of thumb is, if you're investing for 5 years or longer, it's in equities alone, it's difficult to lose money. Even if you invest at the top of the market, and the market craters the next year, if you can sit on the portfolio for 5 years or longer, the growth in equities tends to be such that you can outgrow whatever losses you make. That's the rule of thumb. So if you're investing for the long term, for the sinking funds that was mentioned, it's something that should be considered, and we highly encourage investors to look at it. This is just gives you a sense of the volatility in the returns. In this case, we've got the single year, and then we have a rolling 5-year returns. Let me just skip ahead to make a very clear point. Now, so the bulk of your portfolio is in HISA. The value of your HISA account, with the market goes up or down, it doesn't change. It's like a bank account. When you're going into investing in equities, obviously the equities can go up and down. The funny thing is, in the years that the equity markets are out of favor, we'll say 2008, when investors were running for the exits and selling their equities, that's the same time that investors are seeking safety. So what do they do with their money when they sell the equities? They switch it into safer investments like bonds. And you see the return profile reflect that. In the years that you have the nastiest returns in the equity markets, bonds move in the opposite direction. And this is the free lunch I was talking about. This is one of the main ones I know about. It's called diversification. If you have your basically eggs in different basket bit, but in this case, actually when the equity markets go down, you are very often get a more positive return in bonds. So I think this conversation about adding both universal corporate bond and equity into the portfolio, it's a complementary strategy. So you do get the long-term growth potential that comes with equities, which, on very long sweeping periods of time, it's going to be somewhere in the 6 to 8% return on average for long periods of time, which is a considerable uptick from what you can get in the bond markets. And here's another simple example. I will let you go into the numbers on your own because it's a little bit too granular. The case in point here is if you invested the same amount of money in the starting year, and this year is 2002, under different asset mixes, what were your outcomes going to be? And the yellow numbers show you the outcome. And increasing your equity allocation to 50% from 20% means you're over this period of time, you would have made more than an extra $1 million. And that's even with the situation where you had a very nasty year in 2008, where the portfolio in the right portfolio lost in excess of $1 million. And this is the story. It's investing for the long term. When the equity markets misbehave, you have to have the resolve to sit on the losses and wait for the growth to perk back in. I think there's so the message is, in my mind, fairly simple, and we say it's not just to you, but other municipalities. If you're investing under the Municipal Act, the legal list constraints are designed to prevent loss of money. And it's looking at those losses on the individual securities. The Municipal Act, in my mind, is designed to prevent us treasurer from buying the wrong bond or buying the wrong security. From the investment world, that's not how we typically approach it. We approach it in terms of the overall portfolio return. And we invest not to lose money. We try to invest to earn some growth because that effectively pays the bills and basically will supplant other avenues for raising the money. I'll just ponder this. I don't know if you can actually see this on your monitor. I strongly advise you to look at this slide after the presentation. That's a little bit too small. The message is very clear. If you're investing in equities for 5 years or longer, it's very, very hard to lose money. And that's just the historical precedent. There may be individual years where things are quite volatile. If you can sit on the portfolio for 5 or 6 years, there is very few instances where you would have lost money, and you would have had to try to time the market perfectly to get the wrong outcome to actually end up in that situation. And that really is a message. And that's also one of our approaches to investing, is that we don't encourage the investors to try to pick the top and pick the bottom. Investment is about deploying funds for the long term and experiencing the growth that comes with that. If you're doing it more tactically, the risk is it becomes more speculative in nature and can lead to unexpected outcomes. That was the bulk of what I wanted to say. I'll just give you a quick glance at our fees here. For the corporate bond, that's the UCB portfolio. It's at about 45 basis points and 60 basis points. To give you some direction on the magnitude of those fees, last year, it was a horrible year for the equity markets. Our fund was off about 2.9%. But the benchmark, the TSX was off almost 9%. So yeah, you're paying some fees, but you're getting professional management. We have Guardian Capital behind the product. They select individual securities. Renowned, the very good Canadian equity manager. They select the securities based on a growth at reasonable price process. They interview the management. They evaluate the value of the securities. They also approach this, the mandate is designed in such a way that is appropriate for the sector. They explicitly try to dampen down the risk in the portfolio. So in last year, where we had a particularly choppy market, we outperform by over 500 basis points versus the TSX. With that, the last thing I wanted to say, and I will spend very little time, we are in the process of One Investment in building a prudent investor platform. This is, I think, one of the more interesting things in the municipal sector. This is, in simple terms, it's taking the shackles off the legal list, and if you're investing for the long term, if you do go through a investment board or joint investment board, there are no restrictions in terms of the investments. As long as in a portfolio context, you're investing prudently, and you have the governance structure that comes along with this, it is something that opens the door up for getting better returns for the investment portfolios in the communities across the province. That is what we're involved in, and we're in the process of building that right now. At some point next year, we'll be able to invite other municipalities to join our joint investment board and start investing with us. So we're not there yet. I think you still need to get past the idea of investing in equities and corporate bonds. But down the line, this is something that you should have on your agenda, because I believe it will be a tremendous, I mean, for the likes of sinking funds and the like, longer-term investments, it's a bit of a no-brainer. It allows a much wider range of investment opportunity than is currently available. With that, if there's questions?
Okay, thank you very much, Keith. We do have several questions. Councillor Galloway.
Thank you, Mr. Chairman. Keith, I'm curious whether or not, if we were to get into equities, which there's certainly some merit to consider, are we able to pick and choose which equities we get involved with? Or is it a standard product? So I'm looking on page 46 of the report. Now, that's not your report, I realize. And there's a breakdown of maybe that's a typical portfolio. And so if I was concerned, for instance, about investing in fossil fuels, we could say we don't want to be in fossil fuels.
I wish I could give you that answer, but it doesn't work that way. And it's baked into the Municipal Act. The Municipal Act in itself does not allow you to invest in equities. One investment there's a clause in the Municipal Act that allows you to invest in certain products through one investments, and the equity portfolio is basically the only way you can get equity exposure presently in the under the legal list. There's like a backdoor through certain principal protected notes, but unfortunately the treasurer himself can't buy equities. It's just not allowed. So this is built as a portfolio to give access to something that ordinarily wouldn't be available. But to your point about the concern about fossil fuels or environmental generally, that is something that, it's in the press, it's all over. You can't miss it, especially over this last summer. And it's maybe not by intent, but by default, the portfolio is actually, it accommodates for that. Because of the risk approach that the manager takes, the Canadian equity market is heavily biased towards, rocks and trees, as I'd like to say, the energy sector, mining, forestry. It's a huge part of the TSX index, and those sectors tend to be very volatile, especially, and very cyclical. So to control risk, they have limited the exposure of the portfolio, dramatically limited the amount of exposure to the resource sector. So by default, the portfolio has less exposure to the energy sector than the TSX.
Okay, so I'm confused. I thought we were being presented with a decision at some point in time where we would get into equities, but now I'm being told we can't get into equities.
No, you can buy it quite directly through the one portfolio.
The fund,
but you cannot buy them individually
fund.
Yourself.
Okay.
That's an equity-based fund.
And can that be customized so that we only invest in certain equities? No, you buy the package, that's it.
You buy the package as presented through the One Equity Fund.
And is the One Equity Fund contemplating a product that would be void of fossil fuel equities?
We are not at the moment. I will say that going forward, there has been some suggestion by some of the founding members for the prudent investor offering that environmental considerations be considered in products for the prudent investor offering. But we don't have that optionality presently. There's basically only one portfolio that's available to give equity exposure for all the municipalities in Ontario. So unfortunately, at the present time, there's just not that ability to customize it.
Okay, so looking to Mr. Dyer then, is there an alternate fund that we could invest in? I'm not trying to cut one equity out of it, but is there an alternate fund that we as a municipality could invest in that is void of certain equities? Does someone else provide that product that we are able to
If I could redirect, I mean, this is an issue that's come up a lot recently, especially because of the political lobbying and the sort on climate change. We put out a memo on a sort of a news item on our commentary on our website that addressed some of these concerns. It's my own personal view that if you're wanting to affect change at a listed company, you have to have a voice at the table. And I would prefer our managers to have a voice at the table and vote and express to the management of these companies to do something proactive as opposed to simply not being involved. And there has been instances where having those that vote at the shareholder meetings to actually influence management to change, make positive change on climate issues or social issues or governance, as the case may be. So.
Thanks, Keith. Councillor Galloway, Mr. Dyer will give you a specific answer with respect to your question on what else we can invest in for equities.
Through Mr. Chair, the specific answer is there is no other way to do it. This is the only way currently under the Municipal Act that a municipality can invest in equities.
through
Through the one fund specifically.
Right. Okay. All right. Councillor Foxton.
Thank you. We looked into the one fund about 3-4 years ago and invested into it through the township when the municipal act allowed us to. We are, as a municipality, restricted on what we can invest in and the risk value of that equity because we are stewards of the taxpayer. So, and it's worked out well for us. We do really have a good fund there and like it.
Okay, thanks for that. Councillor Kiefer.
Thank you, Mr. Chairman. Thanks for your presentation. I just want to talk about interest rates for a second, and I believe we're in an inverted yield curve right now, and I'm just wondering if you have any strategy when it comes to inverted yield curves.
We try not to be too tactical at the asset allocation level, because even the gurus who pretend to be really good at it get it wrong all the time. In my mind, there's two things. I mean, yeah, you can try to make a guess at where the interest rates are going to go and where they're going to go next. If I were going to guess, they'd probably go lower before they go higher. But you know, people have been saying that for the last decade. So getting that down pat is very, very difficult. More importantly, I think it's important to, regardless of the interest rate outlook, to have a little bit, spread, have your eggs in different baskets, so to speak. Having monies in some level of longer-term bond. If you're going into equities, having some money in longer-term bonds is a no-brainer, because when the equity market does poorly, you have the offset. So that would be my answer. And I would really caution about trying to pick spots in the market because it tends to work out badly. Mm-hmm. And I don't know how many times we've had investors try to do exactly that. Oh, maybe next year. Maybe next year it'll be a better environment, and they miss out on what's going on in the market. More broadly, we did actually in the package include a study that shows the opportunity cost of not investing for the long term. And while it might be intuitive that not taking risk is a good thing, The math is pretty straightforward. If you have the time horizon to invest, park it and don't touch it, come back in 10 years, and you're likely going to be in the money.
So you would say that asset allocation is probably the way to go?
I would say decide the asset allocation that's appropriate for the municipality and stick with it.
Okay.
The asset allocation should be a reflection of your needs. Trying to do anything fancy to squeeze a little bit more out of it in terms of returns can very often lead to unexpected outcomes.
Thank you.
Okay, thank you, Councillor Kiefer. Councillor Jowett?
Sorry?
Yep.
Thanks, through the chair. Just to get my head around it, this is mostly a MUSH sector-focused organization for the most part. And Keith, you guys are usually just a MUSH sector, municipalities, universities, schools.
Well, absolutely. No, we're nonprofit
municipality.
specifically. If there's any emphasis that we have, it tends to be to the smaller municipalities, simply because the investing is, the economies of scales kick in. The more money you have, the lower the fees are for everyone involved. And the smaller municipalities just don't have the opportunity set that some of the large municipalities do. I would say you guys are probably not in the smaller group,
No, I
but
wouldn't, yeah.
the opportunity set is still there.
Okay, so we're 318 million. So what I'm looking to do is get some comparators. So if you have other municipalities that are looking for you guys to provide this return on investment, do you have any kind of comparators that show us, I think, without being too bold here, you guys are incented by transactions, correct? So
We're
usually, or is it
nonprofit.
different in your particular sector? Because you're managing a municipal sector that's governed probably by the province then, to some degree, then can you give me an idea of how you're incented?
We are nonprofit.
So you're a nonprofit organization that is that's taken on this as a way to help municipalities.
Our mandate is to help, yes.
Oh,
I mean,
very
if you want my personal bias, I want to get as many people on the train as possible because the fares will decline for everyone that's on the train. And, that's really the approach it is. So we do two things. We obviously run these programs and we provide advice. But yeah, I'm from Bay Street, my background, but I will say it's a refreshing change to come to the municipal sector where there's obviously public service involved and actually helping the communities, and that is the mandate.
Well, that's good for our taxpayers. Much appreciated. Thank you.
Okay, thank you, Councillor Jowett. I have two more speakers, Councillor Erb and Galloway. Councillor Erb.
Thank you, Mr. Chair. And this probably is a question to Mr. Dyer. So equities in the long run are supposedly the best rate of return. A bit of a history lesson for me then. How would the region manage cash flow if we tie our money up too long?
Through you, Mr. Chair, so from a cash flow management perspective, so we assess and manage cash flow on a daily basis, regularly, tracking, obviously inflows and outflows. We have short and medium and longer term projections, which help us make decisions in terms of at any given time, if there is, I'll just call it, surplus cash available, does it just go into a high interest savings account so we can access it very quickly? Do we need it in the, say medium term and look for, something in the 1 to 2 year range, or do we have some capacity to invest in the longer term in right now what are mostly provincial, municipal, and bank bonds? So we do that work. We do that work and assess needs on a daily basis. So the option, if you will, the opportunity that we're pursuing here is to add potentially 2 other, I'll say, investment choices, so that when we're making those decisions on a daily and weekly basis, we can then consider whether A, there's sufficient funds available for a sufficient period of time to put into a corporate bond fund or an equity fund. And we would manage that, at a high level, we would manage that by limits on the fund. So for example, we might say on the general fund that investments in equities could not exceed, say, 10% of the overall region overall region investment balance. So there will always, I think, be limits on how much can be invested in a particular sector, and that by nature will then allow us to continue to manage our cash flow on a daily basis.
Okay, thank you. So if we would want under the Municipal Act, something changed where the choice of specific portfolios that we could invest in that Councillor Galloway was talking about, where did that voice at the table come from? From the region, from an organization like One? How does that get influenced at the provincial level?
Well, I think that's it's a very good question. I think if there was the desire by a municipal council to have additional eligible investment opportunities, then providing some type of I know lobbying is not the right word. Advocacy, thank you, is a better term, with
Giving
the province
advice.
to say that more opportunities should be made available, and I suppose the province might say, well, we've done that through the provision of the prudent investor status, right? So that is ultimately the next step for municipalities to consider, is whether you want to go down the prudent investor status road, where you have significant flexibility in terms of investments. It brings with it a significant amount of administration and governance and all that. We're not recommending that at this point. We're considering a recommendation to council to add these 2 additional investment options. But certainly, providing advocacy to the province on this topic is certainly at the discretion of council.
Thank you.
Okay, thank you, Councillor Erb. Councillor Galloway?
Thank you, Mr. Chair. I want to pursue a little bit more what Councillor Erb just started in terms of what other options, if any, there are. So I'm very interested in looking at these 2 new investment opportunities. In regards to the One Fund's equity portfolio, I mean, is One Fund's able to, or you're restricted, I take it, to consider a different mix of portfolio?
We have only one out there at the moment. I mean, there's always the option that we could do another one, but the reality is that there's economies of scale involved. And if we split the mandate in 2, the fees would go up for everyone involved. So we're not really contemplating that at present time.
Well, I appreciate that. I think you're going to get, fairly significant pushback. Maybe you haven't, from other organizations on the fossil fuel issue. Maybe more so now. So who oversees One Funds? Is it AMO? Who is the board of directors?
Sure. Well, we have our own board of directors, folks from the municipal sector. We also, more importantly, have an investment advisory committee, which is a group of seasoned professionals.
But what I'm interested, though, Mr. Taylor, is if we wanted to advocate for a different product that was void of a fossil fuel element, who do we go to talk to? Is it the board of directors?
You could send me an email and I could forward it.
Consider a different portfolio that had a different mix in it.
I could relay the information on to both the investment advisory committee and our joint and our board. As I say, the reality is, I mean, we have had conversations also with Guardian to make this an ESG mandate as needed. This topic has come up and we have had the conversations. It's a matter of of making a decision on what's the most appropriate approach. So we're listening to that, because it's been all, the ESG bit has been, especially the climate bit, has been in the limelight for the last 6 months in particular. But at present time, we're just not contemplating launching new funds at present time.
Well, I heard you say that now a number of times. I just want to know if we were to advocate, this apparently is our only route into using equities as part of our investment portfolio. We have to do it through your organization, which is part of an organization that we're a member of. So I'm thinking, even if we had to settle for even slightly smaller returns, could there be a product that was void of fossil fuels? It seems to me that would be a prudent thing to do, and a lot of municipalities and school boards and others who might use this particular product might appreciate that.
Eleanor?
Thank you,
Go
Chair. Committee Member Galloway, just to give you some further clarification, yes, we do have a board of directors that we report to, so it's comprised of MFOA board representation as well as LAS board representation. We report to them quarterly. As Keith mentioned, we do have a peer advisory and the investment advisory committee. We have conversations with them again quarterly. When we do have situations like this, we do take it back to the board, and we talk, again, first at the committee level and then take it back to the board. So this is definitely something we will take back to the board and have a conversation with them. We do know, again, as Keith has mentioned, ESG is a big component right now. It's a hot topic, and we have had many discussions with Guardian as well. So I think our portfolio, based on the restrictions, the reason why we invest in fossil fuel or fossil component is because there's Canadian restrictions, and we can't get around that. So I think that's part of it. So we will take this back to the board, and we can get information back.
And I think that's the best we can do right now.
Sure, that's fine.
Okay.
I just want to understand the
Sure.
Sure.
advocacy, where do we do it?
So I have a couple comments, and just further to Councillor Galloway's comment, I think the general mutual fund industry has responded to those kinds of concerns. You can invest in ethical funds, you can invest in green funds. So one fund just doesn't have that kind of portfolio mix. It's one equity fund. And so if we're going to invest in equities and you go down a road like, for example, your suggestion about fossil fuels, well, where do you draw the line? I don't like the mining practices of Company X, and I don't like how they treat their employees in Central America. I don't like the pulp and paper industry. So it's a real Pandora's box on what you would consider as a reasonable equity and what's not a reasonable equity, depending on your perspective. So I think that opens up a whole bunch of other questions around equities and ethical and green investing, for example. But my questions are, is it just Canadian equities you invest in?
Yes, that's all that we're allowed to invest in.
And same for the corporate bonds?
Yes, even with the corporate bonds, we're going to the highest credit quality. The average credit rating, I think, is AA minus.
All right, so that really limits the number of bonds and equities that you can invest in.
In the equity spaces, there's also the fact that the financial sector is pretty big. You start taking out other sectors, and you redistribute that weight elsewhere, and you'd end up with a portfolio that is very, very heavily biased towards the financial sector, which may not be ethical concerns, but then there's concentration concerns.
And how many municipalities are currently participating? And what's the largest municipality that's participating?
York is participating in the equity fund. And equity, I'm not sure what's the total number, 100?
Equities, we have, I think it's about 30% of our investors that are in the equity portfolio.
So some are just in the bonds, and only 30% are in equities and 70% are in bonds but not equities.
Correct. And we're seeing a big shift moving from the government bonds. We're seeing that shift where investors are moving their money over to equity through these types of conversations in terms of long-term money and, meeting some needs in terms of revenue sources.
Okay. And what's the biggest position a municipality has with you in terms of dollar value?
I'm just trying to think. York Region.
They have over 100 million?
No, more, over 200 million.
Sorry, over 100 million?
Over 200,
200 million,
over 200.
okay.
And
sorry,
we do
what's the
have
total?
regional governments investing with us as well, other regional governments. I can't name them off the top of my
All right,
head, but I
okay.
can
All right, well,
attest
fair
to the
enough.
fact that we do have some larger municipalities.
Okay.
We do, try and
right.
represent the small, but we do have
All right, and
large.
is York in equities as well as the bonds?
York is currently. Yeah.
Okay, all right, so I'll just tell you where my perspective is on this. I get nervous when we talk about municipalities investing in equities. And I'm sure you've heard that before. So I also recognize that we need to get a bigger return on our portfolio as it is, because it's been a low interest rate environment. It's been a low interest rate environment for over 10 years. So it's really hard for us to get the kind of returns we need to help fund our infrastructure. So from my perspective, I'm more comfortable with the corporate bonds. I think that would give our portfolio a little bit of an uptick and more exposure to better returns long term, and also minimize our risk. So that's where I'm coming from. It'll be interesting to see the report that comes from staff in a couple of weeks, and I'm sure we'll have a good discussion around on the council table. And I'll just like to say that I think it was, I don't know how many years ago it was now, but we had a similar pitch. I don't think it was in council, but it was for investing in derivatives. And we all know how that ended up, and some treasurers across Ontario lost their jobs because of that. So I'm not making the exact same parallel between that scenario and what's happening today, but when you're investing taxpayers' money, I think we have to be a little bit more cautious than one might be investing their own money. So thank you very much for coming in today, and I'm sure we're going to do something, I think, based on the tenor of committee, but I'm not sure to what extent. All right?
Okay,
Great.
thank you very much.
Thank you very much.
Thank you.
Okay, I think that's it. Councillor inquiries, requests for information? Seeing none. Okay, other business? Motion to go into closed session. Could I have a motion? Councillor Jowett, Councillor Shantz, all those in favor? That's carried. Thank you very much. We're adjourned to closed session. Oh, we're going to special counsel first, sorry. And that's public.